Good evening and welcome to the 25th episode of Money Control Masterclass. We are marking 25 episodes this evening, which is why we wanted to do something very special for you. We wanted to bring together two guests who were among our most popular speakers on the show. Zoho's founder and CEO Sridhar Vembu, as well as Zerodha's founder and CEO Nithin Kamath. Thank you both so much for joining us and making the 25th episode of Money Control Masterclass so very special. Thank you very much, both of you. When we last interacted with you together on one platform, on this platform in March last year, things were very different. The second wave of COVID-19 hadn't yet started wreaking havoc in India. Ukraine, Russia did not blow up like it has today. The taper tantrum was yet to begin. And startup funding, well, it was happening at a good pace. Now we don't know how it's going to pan out. So, how has your own worldview, India view changed in the last year, because of all these external factors, internal factors? If you can start by telling us that. Sridhar, perhaps you can start and, Nitin can chime in.
So, first thing that, especially today, looking at April 1, 2022, and compare it to a year ago, more of a caution has crept in across the board. This is not just the pandemic itself, but that was a big factor last year. In fact, COVID itself looks like a lesser problem today. What is going on around the world in terms of the war, in terms of the inflation, the supply chain bottlenecks, all of it. So we are in for definitely more subdued times, maybe even harder times. But if you look at inflation in the picture and how that is impacting a broad spectrum of population, including in India. So this is the first element. And in our own business, startups, all that the funding is now incrementally harder to come by, particularly for smaller companies. Larger companies may still be able to raise, but smaller companies, I think, definitely are having some trouble. Just today, I read news that SoftBank is pulling back on its investment spree, and it's on the Wall Street Journal, evidently. So there is a lot of that I expect going on, and I think all of us in the industry, all of the participants, should be more cautious in how we approach markets, all of that. And in terms of one change in our own company is now our offices are not only open, majority of our employees are coming back, about 60% have started coming back in. That's a big change compared to even 6 months ago or a year ago. So these are all some of the changes that I see.
Right, Nitin?
Yeah, no, I mean, just to add on to Sridhar, I've been also generally very pessimistic about the world for a while, and so I don't know how, but last year was much better than the year before for us as a business. But I think we're seeing kind of plateauing in our business as well. So the last 2 or 3 months, the industry, in terms of new user growth, I think is down at least 25-30%. And just in terms of funding, while fintech is currently hot, and there's a lot of money chasing Series A, like earlier stage businesses, but I think funding at the later stage has become kind of tougher, because especially given what has happened in the US and in India, in terms of some of the listed, uh, you know, fintech players, and the kind of drawdowns they've seen. Like just to give an example, Robinhood was at one point at $85 billion of valuation. They're today at around 12, $13 billion of valuation, right? So we as brokers automatically get compared to someone like them, and if you have got Robinhood, who's doing $1 billion of revenue a quarter at like 11, $12 billion valuation, I mean, then you have to start questioning, how do you then justify a 5-10 billion dollar valuation for someone whose revenue is maybe 1/10 or 1/20th. So I think those questions are getting asked for the companies who've been around for longer and whose valuations are in a few $1 billion and over. But there is definitely, at least in fintech, I can say that there is a lot of interest for good founders. There's so much competition in the Series A seed stage. I mean, it's just quite ridiculous. As in, like, people with I mean, as long as you have pedigree background, you can actually go and raise money very easily right now. But I have a feeling, it's just, the tightening even in the Series A seed is just a matter of time. It's, if it's already tightening in Series D, Series E kind of rounds, it's just a matter of time before it tightens, even here. So I think, yeah, I think I continue to be more pessimistic about the world. So I think yeah, next year, like, we internally as a team, I've actually put a note saying next year is going to be, I think we're going to have much lesser revenues than this year. So at least that's what we're talking about. So,
Nithin, you must be relieved, especially now that you don't have investors breathing down your neck or shareholders, institutional investors breathing down your neck during such a tough time. You can go out and tell your team that revenues are going to flatline, and that's the reality.
yeah, no, I mean, it's I mean, that's like I said, right? I mean, raising money brings some advantages, but not raising also brings freedom and a lot more advantages as well. So you can be more of a realist, by, I think, when you're not in this whole business of trying to, sugarcoat everything. So it's not really a tough time. I'd be lying if I say it's tough time right now. The business is doing quite well. The industry is growing quite fast, but there is a drawdown, and the ways the underlying stock markets are behaving, it somehow seems like we've hit a, like, with all the global uncertainty, I don't know how stock markets will continue to outperform. If stock markets don't outperform, I mean, we as a business are going to suffer. So it's but yeah, I've been wrong about this in the past as well. I mean, multiple times in the past, I've come and said, what, stock market seems like they're topping, but this whole relentless liquidity, being pushed into the markets has just been, helping this keep up. But this can't end well. I mean, whenever this ends, I don't think it's going to end well. So,
Right. Sridhar, Nithin's case, I can still understand because his business is directly linked with how the stock market performs. But if I look at software services, software product businesses, they've actually benefited hugely, from the post-pandemic world because of, accelerated adoption to cloud and digitization. So, what is driving your pessimism, or is this more related to macro factors?
Macro factor, and also keep in mind that we have seen two big downturns before. And
Sridhar,
every
your
time,
audio is a little, it's a little low. If you can, yeah,
is it?
just increase it. Yeah, there's a disturbance. Yeah.
Maybe the rain here. Heavy rains.
Oh, okay. It's raining
Can you,
heavy.
can you hear me now?
Yes, yes. This is much
Yeah,
better.
yeah. So uh, my own caution and some degree of informed pessimism is coming from my read of the overall macro picture first. Our own business has been doing reasonably well, and growth is definitely somewhat slowing. I mean, compared to last year, clearly it's slowing. I think like what Nithin said. And we are not directly geared to the stock market, but the stock market is an index of what is going on in the broader economy overall. And I do believe, having seen these two big downturns in the past, I'm seeing very similar signs where there's a lot of over enthusiasm, extreme exuberance. A lot of that gets corrected in the downturn. And we are, I believe, entering one in the next month or a year, next few months or a year. And so that is what I expect. That is why my own note of caution. And just like Nithin said, we are preparing our own employees for potentially tougher road ahead. Even though our company is on a solid footing, we have done well. I'm actually quite cautious in this current environment. And being private, I can speak my mind on this. I don't have to sugarcoat the news. I don't have to release. I don't have to be in fear of the stock price crashing in the market. All of that. And that is something that I am grateful for because I wouldn't want to be any other way. I just want to have the right to speak my mind on these topics. So I do see a couple of times ahead. I'll be happy to be proved wrong because in business, if you are wrong, if you guess wrong on this and we do extremely well and everybody does extremely well, that's fine. But I do see the inflationary backdrop, what the war is going on, all of it, and maybe the residue of the pandemic, all of these together make for a tougher environment going ahead, going forward.
Right. For all our viewers logging in, Sridhar, Nithin, both of them are live with us on Money Control. So, keep sending in your questions on YouTube. I already got a lot of questions on Twitter, which I will be taking with both of you. Sridhar, a quick follow up to what you said. What's the impact of this likely to be on India? Because, we already went through a very tough period during COVID. Small businesses, medium businesses in particular took the hit. So now, for another downturn, another phase, what impact is this going to have on lives and livelihoods?
Uh, in India, broadly, we have come out of this quite a bit better than you see countries from even China today is in severe lockdowns. Like Shanghai and a lot of places now. Hong Kong, South Korea. So it's really even countries that escaped the initial waves are paying a big price now. So it doesn't appear like anybody came out of COVID better than India. I mean, overall, I think we can be quite proud of how our country has handled this. Having said this, I do believe that lockdowns are no longer appropriate. I think we have, I don't believe anybody, either the government or the general public, no one really wants lockdowns anymore. I think that's behind us now. And having said this, if you look at the particular backdrop now, oil prices is a major challenge for us because we are extremely import dependent. And second, the backdrop, we have to be prepared for example, the dollar as the tightening Federal Reserve proceeds, it causes emerging market damage typically. And so we have to be prepared for our own dollar dependent entities, I'm going to call them. Dollar dependent means not just export, that's one. So we are a dollar dependent entity because we are exporting. The second kind is people who have dollar liabilities, who need who have taken on dollar loans. Those are even more challenged. So these types of companies will have trouble in a tightening Fed. In other words, what happens in the US and in the Western markets have a direct impact here in terms of ready availability of funding or markets or both in many cases, right? So that's one, and we are extremely foreign investment. We have a lot of foreign investment that is coming. So we have created, I know, our major cities do depend on this now. So we have to be careful about what the future holds around this. So that's the note of caution I'll inject into this.
Right. Nitin, I remember, in the last episode of Z Factor, I think both of you spoke about a lot of bubble money coming in and how that will not, be such a good outcome for startups in India. And you also spoke about how some of these new age tech IPOs will help expand the capital market. So, on that score, has the reverse happened looking at the kind of fall that we've seen in some of these new age tech stocks in the last 5, 6 months?
Yeah, to be very honest, apart from one or two, they're still above the IPO price, right? As in, of course, there is, like there's a drawdown in say Paytm, but I think Paytm got very unlucky in their market timing as well because their listing kind of coincided with the really large drawdowns that were happening in the US, in tech, like high growth tech stocks which are yet to turn profit. But yeah, but right now there is, I think, I think it'll be a big challenge for startups to now in the next 2 or 3 months go and list because the drawdowns, while say Zomato, Nika, etc., are still much above the IPO price, they've all seen drawdowns in sync with whatever's happening around the world. So there is, I'm sure there is some, it's not going to be that easy to go IPO. The newer guys will find it tougher to go IPO. Has it meant that there is no demand for IPOs? Not really. I mean, I think at least in the retail, investor side, most of these IPOs, hardly were taking 10 to 15% subscription from retail. So it's not like retail anyways got too much play in these IPOs. But there is a lot of demand. So I think as long as you can keep some value on the table for the investor, I think there's still an opportunity. I mean, the LIC IPO is hopefully around. I think we will get to see if there's like one event that can potentially expand the markets in India in terms of user participation. It's probably the LIC IPO. So there's a lot of excitement built up around that. And I hope, like I said, I hope more companies come list. It's just that when they list, I think you should just leave more value on the table, especially for the retail investors.
Yeah. I'm going to take a viewer question at this point. So this question is from Nirmal Dayaramani to both of you. He says, if you were starting up today, Zoho and Zerodha with the same resources you had when you started decades ago, would you choose to bootstrap or raise funds to compete with the funded startups? Sridhar, you want to take it first, and Nithin,
Yeah, this is to be not a question of timing. At all times, people will tell you that, at that time bootstrapping was possible. Now it's not. But keep in mind that Silicon Valley was raising money even 30 years ago. 30 years ago, there was a lot of venture capital in Silicon Valley. So, and even in India, venture capitalists were there in 2000. Okay, so it's a question of what is your personal timeline, preference, all that. If you can go commit to a strategy, you can see through for 10, 20 years, and you like the freedom of operating on your own, and you accept the limitations of not taking money, slower growth, all that, uh, maybe you should go for it. But if your timeline is different and you are not willing to accept those limitations, like very fast growth in the beginning is not possible when you bootstrap, maybe those are, no, maybe you should take money. So it's not about is this a good time to do bootstrapping or not. It's a question of what you want to do. That's what I'd say.
Nithin?
I mean, if I would always take this opportunity. I mean, this way out, because it's just, I've after knowing a lot of friends who've started businesses, raised money from venture capitalists, etc., and kind of pressure they live in. I would always opt to take the bootstrap of way of building a business. I think if ever to do anything in the future, but it is definitely harder today compared to 10 years back, right? As in, you also have something called as market timing, right? As in, when we started in 2010, when really every stockbroker in India was trying to do other things, and we got very absolutely right in terms of our timing, and can you repeat that market timing by starting now? It's very tough. I mean, it's markets a much crowded market today. It is for you to differentiate in terms of product will be much tougher. In the business of money, credibility is very tough to get by. You can't just spend money and get credibility. You have to spend time and build relationships, build the
Yeah.
trust, and only then credibility comes through. So, uh, um, so I mean, today it would be much harder, but if I had to take a way out, I think I would still want, at least with the experience I have today, I would want to take the of not having to be obligated to someone.
right. And in
And
fact,
I
you've
like to add, actually, I want to add one thing there. What he said is absolutely true. Individual markets dynamics will change. It's not the same SaaS market today as it was 15 years ago, right? And the same, fintech market as it was 10 years ago. All that is true. But it's always raining somewhere. So you just have to catch the rain. So it's like that. Part of your entrepreneurship problem is to figure out where it's going to rain and go there, right? So that's what I would say. It's not. It may not be the same opportunity, but it's definitely going to be some opportunity somewhere. So that's how I would say.
Sridhar, incidentally, it's raining in your backyard and Nithin's backyard. So
Yes. Yeah.
hopefully both of you are catching the rain.
Right. Yeah.
Another viewer question. This is from Parikshit Menon. He says, what do you make of recent corporate governance issues in Indian startups? Nithin, you want to go first?
I mean, this is a very pointed question. So I would want to. I mean, I'd want to
Don't do
maybe skip.
it. Skip
So.
it. Yeah, these are the kind of loaded questions there's no percentage in responding to, so I'll skip it too.
No,
Life is
but
short.
I mean, if I have to, no, if I have to rephrase it, I mean, is lack of governance an outcome of heady funding, where you're asked to kind of scale up because there's so much of money sloshing around? Is that perhaps an outcome that some companies may have had to
See,
deal
yeah,
with?
today, I mean, yeah. So let me give you a generic kind of a response to this, right? I think
Yeah.
today there is a lot of money, and you are given license to kind of shoot to kill types, right? As in you are, you as a founder have complete freedom to do whatever you want to grow as fast as you want, right? And then, if things don't go the founder's way, can you use some of these things that otherwise, the investors were quiet, and they disregarded for a while and etc. I mean, there are two sides to this story. It's not just one. But I think, the root problem for all, root cause of all these problems today, I think, is, in the startup ecosystem at least, is, I think, it's just excessive capital. It's just, just there's too much money sloshing around, and which is leading, to all these second, third order effects of sorts. So yeah. So if you're saying, is too much money the reason for some of this? I would say yes, for sure. So,
Sridhar,
Yeah. So
this is a safe
yeah.
thing to say.
I don't know that there is any particular correlation between corporate governance and simply raising large amount of money. You would think investors who put in large amount of money would also care for the safety of their capital, so they will put in good governance. So I don't know that that's necessarily a correlation, but and sometimes because of the rush, the timing, and the push to grow, there may be shortcuts taken, which investors may be aware or may not be aware or may have looked other way. All of that. So those are, I think, what happens in these times. But always, the extreme boom conditions we saw do repeatedly bring up these issues. Now, I'm old enough to remember Enron in 2000, that bubble, and then you saw the issues in the Lehman moment that we all know about, the burst and all that, what happened then, right? So, and these were very large companies, and they had governance issues, it turned out, huge governance issues. So that's why I don't think it's just a question of how much money they raised. It's also a question of how much pressure they're under, what times we are in, all of that.
Right. Nitin, a question for you from Ankit Singh. He says, how can founders in a bootstrap stealth mode be profitable in the current day and age where capital and cash is all pervasive?
yeah, no, I think it's tough. I mean, I don't see, the thing is, we could build a profitable business in broking because, of the way, because of the industry, the sector we are in. It's not a very, it's not a commoditized product that we have. There is a lot of, a lot of tech behind whatever we run, right? And so it's not very easy for someone to copy. So by, someone can't very easily copy, build, and offer exactly what we offer very easily. And if you're in a business like that, where you're kind of, have a commoditized product which is very easy for someone else to kind of very easily replicate and offer and undercut you, then it becomes very tough to make money in this, you know in this world, right? And that's why then the war becomes the deepest pocket wins type of war, right? So uh, I mean, like, actually kudos to, Sridhar and Zoho, because, it's such a competitive market, and they've been, around doing profits for so long, because this argument of mine fails because, with so many competitors they're still doing so well. But in our space, at least, like I said, we were very lucky that we didn't have too much competition until we got to a certain scale. And then, we've been, as a business, being very nimble in how we operate, and we've been able to put some distance on the competition, and that's how we've been able to remain profitable. Now, what is the secret? I don't know. I mean, I don't know. I mean, what's the right answer to this? But I think it's business specific. I don't know if, I can really give a generic answer that will work for all sectors and industries.
Sridhar, this one's for you. This is from Dwarka Nath. He says, what are the advantages and disadvantages of opening offices in rural areas? And actually, I want to add my follow up to that question. Should the government incentivize companies opening up offices in rural areas? I think Portugal, Switzerland, they are introducing cash incentives of some kind. So, should the government look at doing that?
First, yeah, I do believe the government should encourage more of dispersal of the fruits of development for a very practical reason. in our country, if we are going to say urbanize everyone and bring people to our existing cities, our cities can't bear the load. We don't want Bangalore with another 20 million people, or Chennai with another 20 million people, or Delhi with another 20, 30 million people. This is not realistic. It's not good for the country. It's not good for the cities. It's not good for anyone. It's not good for the new migrants, all of us. So, which means we have no option in a vast populous country like ours to distribute the fruits of development. So that's important. So companies should be opening offices in rural areas. Now, when we said this, what are um, the advantages are numerous, like I mentioned, cost of living, all of that. Disadvantages. First, you have to fight the perception that somehow rural towns lack in all the amenities. That's increasingly not true. At least south here, you have hospitals, you have good schools, you have all of that. Shopping mall. I mean, I could go have a pizza here in Tenkasi. Actually, ice cream, all that is there now, and there's a there's even a shopping mall that has come up. So all these are spreading all over, at least in the places I visit. I was in a small town called Surandai the other day, and I saw a nice, beautiful shopping mall has come up. This is a town most of you may not have even heard of. It's a small town, but it still has a shopping mall now. So, like that, the development has come in a lot of places. That's the first thing. And but the perception is there. Perception lingers that somehow you make a big quality of life downgrade in terms of smaller towns or villages, which is not very true. And the second is, of course, availability of talent, experienced talent. That can be a problem. So the way that we have tackled in Zoho is we invest heavily in skill building anyway. In other words, we go in assuming that there is no existing prior talent available. But if you are making the opposite assumption that you are assuming ready-made talent available, you may be disappointed because there is a problem there. But I would encourage that most people should be thinking about talent development anyway, even in cities, because that's how you are going to get really good people for your business long term if you only invest in them. So if you are going to invest in them, you might as well also invest in rural areas. So that's how I will say it. But that can be seen as a disadvantage because if I'm not investing in talent development, then going to rural areas mandates that investment. That's the problem.
Yeah.
So,
I'm going to check out that shopping mall when I come to visit you,
yeah.
Sridhar. But this actually reminded me of a tweet I think by the founder of Khata Book. He said Bangalore's infrastructure is so bad that some of the villages have better infrastructure than areas like Koramangala in Bangalore. I don't know if Nithin will agree or disagree. But Nithin, you were saying that many of your employees are now working remote. You're planning, I think you have a satellite office in Belgaum or you're planning something. So again, is that a trend that you're seeing even post-pandemic? Like people are willing to work wherever they are?
Yeah, no, I mean we've taken a call that we will be permanent work from home, and because at least for majority of the team, so 90%, 85, 90% of the team, the support functions, etc. We've said it's working very well, and people are kind of enjoying living in their small because post COVID, we kind of put out a mailer saying, what, we'll be permanent work from home. You can relocate wherever you get more bang for the buck. And we also had this whole hope that in that process these people will go back to small towns and villages and kind of build economies around them, right, which can help those local areas as well. So it's worked very well for us. People are enjoying. Every month, every few months I send a survey form saying, do you want to come back Bangalore, and generally the answer is no. So yeah, we had set up an office in Belgaum, before COVID, when there was this whole Kaveri riots and in Bangalore, right? As in we were forced to shed shop one of those days. So we thought, we need to have a backup, and we had set up a place in Belgaum, and we found amazing talent there. I mean, and 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 once some of the guys from Bangalore went there, and soon they got a lot more folks from Bangalore to come relocate to Belgaum. So yeah, so we have a really large team today who's kind of working from Belgaum, and folks are enjoying Belgaum as a city. They have nice independent houses and maids, and which they could never think of affording in Bangalore. So yeah, but I think the core team, the product team, the tech team. I think there it's going to be more hybrid. So we're saying, what, just hang around somewhere near Bangalore, and let's try to meet up at least a few days a week, a few days a month types. That's the stance we've taken.
Right. The talent equation actually brings me to my next question. How are you, managing to attract and retain talent? I mean, Sridhar, in your case, correct me if I'm wrong, but I don't think Zoho has ESOPs, does it? So, despite that, how are you able to attract, retain talent? And Nithin, I recently read that Zerodha has just 33 people in the tech team, and only two people have left in the last decade. And that too for some personal reasons. So that is quite a feat considering the amount of people are throwing the money that people are throwing at tech talent. So what are both of you doing differently to attract and retain tech talent? Sridhar, you want to go first?
We, our, our employees have to feel that if the company is prosperous, they share in the prosperity, and we do that. Our long-term employees and even recent employees have done quite well. We have good bonus schemes, all of that. As we make money, the employees share in the prosperity of the company. So that has been an ongoing process, and that we have done well with that. And in terms of attracting new talent, we always take the attitude that we have to invest in that, creating the talent. Not just say that somebody with a, we cannot just take somebody with all the skills and plug them in, but we also want to create those skills. We are investing in that. In fact, we have expanded that investment in the last 6 months or so, now to attract more diverse group of talent, particularly in rural areas. We are conducting a lot of these incubation programs to identify talent and bring them into the company. We are doing this across a lot of locations right now. Hundreds of people are in the program at any given time. So that's our approach to talent creation and talent nurturing. Long term, we have retained our talent quite well, in spite of the fact that Zoho is one of the most uh, targeted companies for a lot of other companies. We have actually retained our talent quite well. I hope it continues, and that's also because people have a sense of belonging. That we are
Yeah.
a company that is rooted, and that's something that I always say. So you may not agree with my opinion on every subject. You definitely will not agree with it in every subject. But I'm going to say that you will like that you have a person who is honest in speaking their mind and not give you a typical corporate speak bullshit. So that's I think that's important for a lot of people. That at least that they like it or not, they hear something that is direct. In my opinion, it's not some massage thing for public consumption. So
Yeah, in fact, I saw a data point recently which said I think the most number of the Zoho mafia is perhaps the most in number when it comes to founders who have come out of Zoho and went on to start other SaaS startups. So I think Zoho mafia tops the list there. Nitin, on your secret sauce to retain talent?
No, I mean it's essentially what Sridhar said, but at a much smaller scale of sorts. As in the problem statement we're trying to solve for isn't as broad as what Zoho is trying to solve for, right? As in, so we've decided to build a great trading and investing platform for our users, and so anything outside this aspect, we've tried to collaborate versus trying to build it all ourselves. And so that's how the Rainmatter fintech ecosystem and all the startups that we partner. So we're not targeting multiple large problems at the same time. So one of the reasons why we can be such a lean team is because of that. Why this whole that I used to come from the school of thought which thought that more people can help solve problems better. But Kailash is really is a man whose philosophies I've kind of headed over the last many years. So Kailash heads our tech, and he's the one, I think, the main reason why the tech team is just at 33. But some of his philosophies, we've also incorporated in the main business. So even our core team, with our product and our process and risk management, all of them. So we've hardly had any attrition there as well. So, and then when you're a smaller team, it's also, I think it's much easier to kind of keep everyone together as well. I think it becomes harder when you become much larger. So as a even in terms of new hiring, we've been very particular, very slow, and yeah. So I mean, I think that all of that is helping us kind of remain lean, take care of our team well, and and because of which attrition is hardly anything at all. So,
Right. One more viewer question at this point. Will Zoho and Zerodha go public? This is from Vicky AB. And I think this is, one of the most frequently asked questions. This is like an FAQ that you keep getting on Zoho and Zerodha. Will you ever do an IPO and distribute that wealth to a wider set of stakeholders? Sridhar?
I don't have any, I mean, not as long as I'm in charge of the company, so no plans. And after me, who knows? So,
no, I mean, with us, unfortunately, there's no predictability in the business, right? And because it is, it's a little weird that the largest stockbroker in India, who tells everyone to list and leave value on the table, create wealth for the country, somehow, is saying I won't list myself, but it's borderline hypocrisy, So
well,
the issue.
actually, Bloomberg, I point to Bloomberg. Bloomberg is a
Mhm.
private company, and
Right.
they cover all the public markets. So there is no hypocrisy.
Right.
You get to be whatever you want to be. So you are not preventing people from being public, nor are you
Right.
pushing them to be public. They choose, and you serve them, right? So,
Yeah. So, yeah, but the issue is in generally as a business, the issue is there is no predictability, right? As in, we are really one regulation, one circular from SEBI away from say a 30% drawdown in revenues, right? So you don't know which day the circular can come. So or something like I said, we are down, I think we're down 30% in terms of new user growth, just because the markets had a small little drawdown. So it's without the predictability, taking obligation of retail investors, who can't really potentially take risk with their capital. I mean, just taking all that obligation on board, and then trying to force your business to grow to meet those expectations. I mean, these are all some things that somehow, I mean, I fear. And maybe sometime in the future, if there is clear predictability for the next 5-10 years of what we will do as a business, maybe at that point of time, but nothing in the nothing in the next few years for sure.
Even but Sridhar's given you a good excuse now. You can just say, look at Bloomberg. They didn't have to go public.
No, but the thing is, the issue here is that we come out in the open and I keep talking, like I just said that startups should come leave value on the table, create wealth for retail investors. I mean, Bloomberg doesn't do that. So when I'm saying that, then saying I won't list, but it's a little of an issue. So.
Right. I also wanted to get your view on another audience question, Nithin, if you can take this. What's the most exciting thing Rainmatter is working on right now? This question is from Ronajoy Mazumdar.
Yeah, so I mean, so there are two Rainmatters. One is Rainmatter FinTech, and one is Rainmatter Climate. So at FinTech, I mean, I think we're right now, in the process saying that the large problem to solve for in India is really the advisory problem. I mean, there are a lot of people today who are interested in the capital markets. They've all come to the markets, but they don't know what to do with it, like how to manage their money better. So yeah, so we're right now, in that whole process, talking to many startups who are trying to solve for that problem, which is to help people do better with their money. Around advisory, what we have realized is, when it comes to money, people like to talk to people. Uh, you can't just do a push notification, or have like a robo advisory platform that will help people do it. People, as soon as the money becomes serious, you might do an SIP of 500 rupees based on a push notification, but you want to invest 50,000 rupees, you want to talk to someone, right? So it's a complex problem to solve. So that is something that we are working on the Rainmatter FinTech side. On the Rainmatter Climate side, I mean, we have like an amazing team, and like a bunch, like today itself, like one of the startups that we're helping called Zero Circle, who are making plastic out of seaweed, like plastic polythene bags, out of seaweed, and they just send out the samples. It's just brilliant. It's very exciting that we are kind of helping a startup who's trying to, change some of these like high carbon footprint kind of items, and yeah, so that's what we're doing.
Right. Sridhar, I want to get your perspective on something else. The whole Ukraine versus, I mean, the Ukraine-Russia war has also kind of shown you that, be it technology companies, other kind of companies, they clearly pick a side. And in this case, they've sort of sided with the US, be it your big tech, which, they've always claimed that they are neutral platforms, they're just carriers of information, or even your payment systems like Visa, MasterCard. It kind of reiterated the importance of having our own systems, which we've managed with rails like
Okay.
your UPI. So, how can India sort of be more self-reliant when it comes to these tech platforms? Are we too late? Did China perhaps do this better than us? How can we really make up for it?
Yeah. We definitely need our own tech platforms, not just self-reliance in technology in this area, but in broader classes of technology, whether it's defense related, whether it's electronics, a lot of it. It's also the size of our country, right? With 25 million, 24 million babies born every year. There is plenty of talent here to go around, plenty of talent to solve these problems. So I definitely think that there is there's this all this technology must be we must aim to be self-reliant in all this. And it's not just in in the technology that in internet and online those media platforms, but also in other areas, manufacturing, a lot of that. And our own trade must be on an equal footing, where nobody gets to dictate terms to us. This is the part that gets me, because a lot of times that we are not just getting friendly criticism. We are actually getting a you do it or else an implied threat there. And I don't think that's a way that we want as a country to be threatened with our own history, right? We have had 1,000 years of being dominated. This is what I tell my own American friends. You actually have to look at our history, where we have come from. We're a country, we were a colony for 200 years, and we have actually had invasion, plunder, being dominated for 1,000 years now. And so we actually have the right to be an independent nation, the right to have our own destiny, control our own destiny. And simply just going doling out advice on these is not acceptable. It's not, you don't know the context, you don't know the history, you don't know our neighborhood, and you don't know our cultural foundations, where we come from. So that's why I think it is important. Technology is a very important part of being self-reliant, and it's not too late. It is not too late. I mean, take any of these platforms. Take Google as an example. Name one thing in Google search that is different today than 10 years ago. Name one thing. You can't remember anything. In other words, all these, there is a, take operating systems. When was the last operating system version you actually paid attention as an end user? I don't think any of us can actually respond to what is the particular version of the operating system we are running today. Right? Most of us won't know today. So, which means it's not too late. We can actually catch up. Could be 10 years, but in the history of nations like ours, 10 years is nothing. We could actually catch up in 10 years. So I do believe we can catch up, and we should catch up.
Another area, Sridhar, that you believe is that we should take inspiration from East Asia, from Japan, and not from the
Yes.
US in terms of how we go about building the economy. But why is that? Why is Japan a better parallel compared to the US?
Yeah. See, these are all, whether you take Japan or South Korea or Taiwan and even China, and China less so than other countries I named, they're all resource constrained, heavily, densely populated countries. And this applies to Eastern China as well. If you look at the Eastern and Southern China, heavily populated, heavily resource constrained, very few natural resources that we think. This is true for Japan, this is true for South Korea, this is true for Taiwan. To a lesser extent, it's also true for China. And the fact that all these countries have developed and have really caught up and have done well also gives me hope that we can do this. There are lessons here to learn how a densely populated, resource constrained, highly rural based originally population grow to produce an advanced economy. Japan has done it, South Korea has done it. We can do it too. We definitely can do it. And we have to go about it keeping in mind our own roots, our own culture, our own way of life, all of that. And that's why it's not simply that we cannot plug in a model from the US or anywhere else and make it work. But if anything at all, the Asian countries have more to teach us in this because they have faced very similar problems. Not exactly the same problems, but very similar. That's why I keep advocating that.
Got it. A viewer question again, Nithin. This is for you. Discount broking, small case, both seem like fantastic tools. What's next for Zerodha? This is from Mihir.
Yeah. No, see, the thing is, this whole, we get called as a discount broker, which is, like a low cost broker. But really, that bust passed away like 6, 7 years back. Today everyone is a low cost broker. So I think uh, you know I think the reason Zerodha has done well is because of the products and initiatives. What next? Like I was alluding to earlier, right? As in, I think we haven't yet done, while we have done well as a business and now, we've grown and revenues and all of that, but we've still not been very successful in helping customers do better with their money. I mean, we've offered a great platform, but uh, we've not been able to incrementally help customers do much better with their money. And really that's like the large problem that we're trying to solve for today, which is, like we have 9 million customers today, out of which like 4 to 5 million people log in, and trade once a month. So how do you get them to do a little better with their money, as in get them to take better decisions with their money, right? And it's a much more complex problem than building a good looking trading app, which can do, which can scale well, etc. It's and that's where, a lot of us internally have been spending our time and effort, and if we can do well, it'll be very satisfying as well. So,
Right. Sridhar, this is for you from Mihir again. He says, what is one business segment in SaaS that hasn't been explored that you feel can make for a good business?
I think by now a lot of segments have been explored. But if you look at things like ERP, the manufacturing segment, they've been less SaaSified than other segments. But doesn't mean even they have a lot of SaaS platforms, but comparatively less of a penetration. So that's something one area. And healthcare also has been slower to move towards SaaS platforms, but there have been companies doing it. But these are manufacturing, healthcare. These are all so verticals. Basically, now we have a lot of horizontal SaaS players, vertical that covers a particular segment. Some segments may have less penetration than others. That may be the opportunity there in SaaS. Chandra, are you there? I think she's. So we have to
oh,
continue.
she's like,
Yeah, I think she dropped off.
yeah.
So I'll ask you this, Nithin, you mentioned you have a lot of employees working from smaller towns. We actually have likewise, but what we have found is that face to face is required for team building, particularly when you have a lot of new people. So in our
Right.
case, we have been growing at 20, 30% in terms of headcount. And so a lot of new people have joined in the last year. In fact, many of our new employees clamored for when am I ever going to meet my colleagues? When am I going to meet even my manager? All that. So we have actually had now a turnaround where we think mostly about 70, 80% will work from office with a hybrid mode. Some people may have a permanent work from home load, but they also accept that because of that, they may not be able to train or coach, mentor other people because those things very much seem to require face to face. What do you think about that?
Yeah. No, I mean, see, the thing is, for us, we aren't growing in our team size, right? And we are not needing to grow, and that's why it works. But yeah, but you're right. If you have to hire new people, it would be, like a big challenge to hire, in a completely remote kind of an environment. So we are around 1,200 people in team size, and we've been between 1,100 to 1,200 for the last many years. we've been constantly trying to improve our processes and all of that, and that's helped significantly. So, but you're right. I don't know how we would be able to hire remotely and build culture, build team. I think that'll be like large problems. This is working well because most of this team we've already worked together for like a
No,
few years.
exactly, exactly. See, the work from home assumes that there was a prior familiarity, everybody knows each other, and an occasional meeting can renew ties.
Right.
But how do you form those ties in the first place? How do you create that culture and bonds in the first place? That's, I think, what the issue that we are grappling with. And so that's why we have made a decision to have default mode office with work from home as an option for some people and a hybrid mode. That's how we are
But
doing it.
wasn't there any resistance from people to
There
come
is,
back?
there is some resistance, but we so what we are doing is on a case by case basis we are granting people work from home as a this thing for some people. For many people, they are actually about 60-70% are willing to come back at least 3 days. What majority want is actually the option to work from home on some days. So that's
Right.
not permanent work from home. That's the big request, and that we are granting. So that is the big difference. And otherwise, we are hybrid mode plus some people working from home, but default face to face a lot is how we are heading now. That's the
Good.
Great.
Yeah, I can that.
This had to happen. I was just thinking,
yeah.
wow, I've had uninterrupted access for 50 minutes. And then, I jinxed it. But, coming to the last 10 minutes, I wanted to ask both of you, both of you grew up in middle class families, so you imbibed those values. But how difficult is it to transfer those values to your children? Because I mean, they are growing up as sons of billionaires. I mean, even if you don't keep telling them that, they will know that in some form. So, is that something that keeps you awake? How do you sort of inculcate the same values in them? What do you tell them about money and wealth and so on? Nithin, you want to go first, and then Sridhar can come.
I want to hear what Sridhar has to say because this is like I was 6 year old and I've been grappling with this problem myself. So,
Actually, in our case, my siblings, myself, we have all brought up the children to be quite normal upbringing. In fact, it helped that during the entire time we were not all that well known, the company or something. So only in the late teens they even came to know the that it's actually quite a substantial business now. But having grown up with middle class values, so I think they have imbibed those. None of the children are in any sense assuming anything, and they all actually want to work for a living. That's the difference, right? Nobody in the family is assuming that they will have some wealth they can draw upon, that they know that they have to work. That's the mindset that I will inculcate. And also quite ordinary taste. See, part of it is leading by example, right? They look at me and that my kid or my siblings, kids, all that, how I live, how my siblings live. It's an example, and they think this is the normal way to be. So I generally like to shield children from excessive displays of wealth anywhere. So I simply don't take them there. So there's a lot of wealth being spread around. So then they internalize the idea that we just have a certain way of life that we continue. So it's possible. It's a form of I'm going to call it for lack of a better term a religious upbringing that emphasizes certain values that then people continue to have that regardless of whether there's money or not. That's how I would say.
Nithin, I hope that helped.
no, it does. It does. No, I mean one of the like I personally have a couple of vices, and which is what I'm trying to control, on. So like I know that now I have a son who's looking up to me, and while the issue is the system around us, right? The ecosystem around us, his friends, his teachers, the importance he gets because he's my son. It's very tough to control that, and especially in a city like Bangalore where you know and that's why I hate this whole billionaire and unicorn stories because it's just it just sets a wrong image you know, it kind of affects everyone, not just you as a person, right? I mean, it affects my son, my wife, I mean, people around, my neighbors, they all look at me in a certain way, I love to play basketball with kids, and now, I can't, because these kids are like, they suddenly don't treat me like a competitor, they treat me like like some, billionaire who can't be hurt. So when I play basketball now, like everyone's like, maintaining a few feet distance from me, so and they're trying to be gentle with me, and so it's right from there to everything, so people react differently to with all of these, valuations too, so it's a big challenge, I put Kian to this school called as a Valley School, which is very Krishnamurti Foundation, and I've been reading his books for a while, and I'm hoping that being in a system like that where the right kind of principles, values are taught, will help him. But even if,
Uh,
yeah, please, please.
I have one more thing to add on this. Nithin. Maybe it help. See, big cities, particularly the large successful ones like Bangalore, tend to be prestige traps. I call them, right?
Yeah.
That you are measured by the prestige. So you come and live in a place like this. It actually, see, people don't know what all this wealth even means. Right? They don't care. If they don't know, they don't care. They don't look at you any different. I go play cricket with the guys here in our village, our this thing, and they don't cut me any slack. I
Yeah.
still get so
You still get clean
uh,
board.
yeah, exactly. And I have to protest. I have to say no, that's not fair. That's wrong. I have to appeal the umpire's decision. So I always do that, right? My brothers will tell you that I hate to lose, so I'll do that here. But at least it's not, it's the thing is, it's not. There's no prestige to live up to, and that's one of the reasons why small towns are appealing to me because people have other parts of life going on. There's a temple festival, this and that going on. Nobody is obsessed about status, wealth, all that all the time. So it's quite actually nice to live in places like that, honestly.
Within Sridhar simply asking you to leave a prestige trap like Bengaluru and move
Yeah,
Yeah.
somewhere.
yeah. I need to convince my, like the
It'll be
family.
fun to have both of you in, the same city. That'll be nice. But on a final note, both of you also talk a lot about how contentment is important. That I mean, chasing the next big thing, the next hype, is not what you like to do. So I mean, what is contentment? How do you kind of achieve that, or is that something that you've always been after, or was there a phase where you used to go after material pursuits and then it kind of became boring and you decided that you will just be contented? So if you can take us through your own journey in terms of your ambition, how it changed over the years.
Well, I splurged on this headset. It's quite nice. So without it, I so can get some nice things. It's not like you have to be self-denying. I take the Buddha's advice here, right? Middle path. You don't want to be like self-denying to an extreme where then everything becomes a grim struggle. But at the same time, we don't want to keep measuring ourselves by that. That comes naturally if a certain way of life you adopt. In other words, I'm going to say contentment is not something you force on yourself. It has to be part of your very ambience. If you're surrounding yourself with people who are contented, you will be content. That's it. You're surrounding yourself with people who are constantly striving for, hey, I want this, I want this. And so look at your friends. Look at who is your immediate peer group, all that. That determines you, right? Your average of your best five friends. So that is how I will say this contentment comes by that process, in my opinion. And if where I live, the neighbors I have, the people I interact with, it naturally promotes contentment. It's never comes up. Actually, the size of my wealth, this whole billionaire, all this stuff never comes up here. Nobody actually worries about this. I'm just, and people respect me for other things. We run a school, all that, but not because I have lots of money. So,
Shy. Both my kids just photo bombed, video bombed this session.
Yeah.
Nitin?
Yeah, no, see, I was a stock market trader before Zerodha, right? So, I mean, I'd be lying that, I started this whole journey saying it was all material for me. But I think I kind of hit that point in the journey as a trader itself, saying, the more I was chasing material goals, the further away I was getting from it. And I was not even enjoying the journey. Right? And so I think it was somewhere, in this whole life, so some point, there was a tipping point where I said, you know what, if I probably do the right things, whatever has to happen happens. And it's a more stoic way of looking at life, and then I've enjoyed my life. Success has come, without chasing it, it has come by. So, and and then, like Sridhar said, right, I've been very lucky to be around people like me, be it Nikhil, my brother, or Kailash, or my wife, and so there is no pressure to constantly keep growing or keep buying something new, and like so yeah. So I think um, it's just that.
Right. What anchors both of you? Is it spirituality? Is it something else? Sridhar, perhaps you can go and Nithin can chime in.
I'm a hardcore tech person too. I actually work on a lot of technology, code, all that. So that keeps me grounded. I mean, I can spend, in fact, sometimes you get into it for hours. You cannot get out. You cannot turn it off. So that's a relief. That's actually a good way to be. So I try to get into some deep problems and then try to think about solutions to them. That could be in any area of technology. I try to figure this out and see how it works. That's what my own. That's my own version of spirituality. Figure out
Yeah,
how things work.
you mentioned you're working on something right now.
Yeah,
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 yeah, yeah.
yeah.
Nithin?
I see. I started trading the markets from when I was 17, and I was very active, interacting with other traders as well. So this life problem of mine, which is to help people do better with their money, is really, you know, what keeps me going. I mean, it isn't about success or valuation or whatever. Right? As in, it's right now for me every day. It's about, what can we do which can help someone do better with the money, because I know that if at the end of the day, if we do well, there's more financialization in this country, more Indians will back more Indian entrepreneurs, and if more Indians back more Indian entrepreneurs, our dependency on the West, foreign capital will reduce, and which will in turn in the long run maybe make some dent to the country. So that's really what keeps me going. Basically.
It's actually uh, amazing that I've never actually traded. In fact, right now I don't even have a brokerage account to trade.
Nithin,
It's
do
kind of weird.
something. You're gonna get a HNI. I'm giving you a HNI on the show. Yours to pitch.
No, no. I mean, I don't think Sridhar has to invest in the markets. I mean, he's helping enough startups. I mean, he's helping enough entrepreneurs. So, see, the idea of investing is to help entrepreneurs, and so as long as you're doing it, you do it through public markets, private market, doesn't matter. So,
But Nithin, you've been on 2 episodes with Sridhar. You still haven't been able to convert him, to a Zerodha
no,
customer.
I mean, I don't want to. Like I said, he's doing. I know why bother about daily mark to market. So, when.
Great. On that note, thank you both so much for
Thank you.
joining us on the 25th episode of Money Control Masterclass. Hopefully, we'll have you back next year for the 50th episode to mark the Golden Jubilee. But brilliant insights as always, Sridhar and Nithin. Thank you very much
Thank
for
you.
joining us.
Thank you.
Right.
Thank you so much.